Traditional banks aren't going away anytime soon, and you're not going to get rich owning their stock either. But SoFi is changing the game in the traditional banking industry. And in this video, I'm going to show you how to double or triple your money in just the next few months. I'll show you the top 3 reasons that SoFi stock is going to explode over the next few months, and I'll show you exactly how I'm going to profit from this using options. Guys, before we get started, if you appreciate the time and effort that goes into making these videos, be sure and hit like and subscribe down below. It gets the video out to as many people as possible. Also, be sure and download the free options workshop in the link below. It talks about the 2 main benefits of trading options over buying stocks. There's also a paid course as well that's very reasonably priced if you want to dig into the options a little deeper. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software, which is great and I use every day. It's a zero commission online platform brokerage. So, what are the top 3 reasons that SoFi stock is going to explode over the next few months? Well, number 1, they're disrupting traditional banking, the whole industry. They've got different ways of doing it. No brick and mortar stores. It's all online. And there's multiple products. Number 2, interest rate cuts are coming. Chairman Jerome Powell's already indicated this, and we'll get our first one this month in September. And number 3, student loan debt forgiveness. And let's jump into it and start with that one. So just last week, the Supreme Court strikes down Biden's student loan forgiveness program. By a vote of 6-3, the justices ruled that Biden and the administration overstepped its authority last year when it announced that it would cancel up to $400 billion in student loans. So what this means is students and the parents of students, believe me, I know, have to start paying down the student loan debt. That was delayed due to COVID. And this is right. I don't think other people should have to pay other people's student loan debt. They need to start paying at the end of September. So it's basically this month, right away, or they'll no longer be protected from being reported to the credit agencies. So the student debt loans on SoFi's books will start to get paid more frequently and better. And more importantly, they will see a lot more refinancing of student loan debt coming in from other loans and institutions and from students and parents that want to consolidate loans where they have multiple loans and maybe higher interest rates, especially as the interest rates come down, which is inevitable. Fed Chairman Jerome Powell already indicated that rate cuts are coming, so it's just a matter of how much and when it's coming, although we know it's coming in September. So it's really just how much. There's a 70% chance that it will be a 1/4 point in September and a 30% chance that it will be a full 1/2 point cut in September. And by January of next year, 2025, it's most likely that we will be all the way down with the Fed funds rate at 4 to 4.25%. So with those 2 reasons, student loan debt relief ending and interest rate cuts coming, that's a huge benefit for SoFi. It means more lending business, which has been pretty stagnant. So what is the 3rd reason that SoFi will explode? I think it's probably the most important. They are a market disruptor, changing the industry with other forms of making money. They're changing the traditional banking industry. Jennifer Sable from the Motley Fool wrote an article. She said, the market just made a big mistake about SoFi. Here's why. It continues to report strong growth and it posted its 3rd straight quarterly profit. But SoFi stock is down more than 20% this year. The market is making a mistake and you can benefit from the stock drop before the market gets clued in. And they talk about SoFi disrupting traditional banking. It's a full financial services platform that offers lending and other banking profits, more on its digital app. And kids love the digital app. It has no physical branches and it targets students and young professionals. So these customers, they skew to the younger, and it's a long growth runway. and market that SOFI has in front of it. The Q2 earnings update was chock full of positive news. Members increased 41% year over year to nearly 8.8 million. Adjusted net revenue increased 20% and it produced net income of $18 million. SOFI is more than just a lender. Outside of its core lending segment, it has two other segments, the tech platform or the white label financial infrastructure services under the Galileo brand, and financial services, which are the non-lending services. These two businesses are growing at a much faster rate than lending. The lending segment revenue was $341 million in Q2, only a 3% increase over last year. The other two segments increased 46% year over year in Q2, but they're still much smaller. So we've got to wake up before the market does. This is a visual representation of how the non-lending segments are growing. So you can see they're growing big. Interest rates are probably going to be cut before that, and when that happens, SOFI's lending segment should rebound. So we've still got that coming. Now, the stock price is currently trading at $7.99. We go to the Tasty Trade platform and we punch in SOFI in the upper left, and we bring up the option chain once we're on the trade page. So we will buy the three strike deep in the money call option by clicking on the ask. The cost is $5.25. Since one option contract controls 100 shares of stock, this is really $525. However, keep in mind, if you were to buy the 100 shares of stock outright, the cost would be the stock price, so $7.99 times 100, or $799. So it's quite a discount to control the same 100 shares of stock. Now, if we switch to the curve mode, we can see that as the stock price increases, we profit just as if we own the shares outright. If you look at the vertical line at the $13.50 price, it shows the P&L at expiration of $525. That is what we paid for the option, so this is a stock double. We hit review and send and place the trade. Now, this is a buying opportunity in my belief and my opinion, and this is why I'm getting in now and going along with Leap's options. Looking at the year-to-date chart, you can see that SOFI is just starting to trend up after hitting a double bottom, which is a bullish sign. With student loan debt forgiveness ending, interest rate cuts coming, and SOFI disrupting the market with multiple sources of revenue, I suspect it will be right back above the $10 price very soon and heading toward 15 and up from there. All right, guys, I put a link down below for the free options workshop. Be sure and grab that. Remember to hit like and subscribe. Join Mumu. Get your 15 free stocks. Leave a comment. Ask a question. I answer everyone. Let me know what you're trading, what you're having success with. Thanks for watching. I'll see you in the next video.